Nvidia stock is down roughly 5% today, and after hours, the stock is down another 1%. On today's episode, I actually want to take a closer look at some more updates impacting the rumors about Blackwell delay. And I want to say these are pretty good and are, in my opinion, painting a better picture of what's happening if the delays are true. We also got some other semiconductor updates impacting overall Nvidia, and we do have an analyst that believes there's 3 semiconductor companies that are sitting at attractive levels. One is Nvidia, and I want to say I pretty much agree with this analyst on the other 2. So we'll take a closer look at all that in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so we can see Nvidia sitting at $99. The stock is down roughly 5%. I don't believe there's any real reason for the stock to really be down. I mean, let's just remember all the bullish cases. Cloud server providers in the past earnings have mentioned that they're going to continue to invest in AI server and in AI infrastructure, bullish for Nvidia. We saw Supermicro mention that they're expected their revenue growth to do amazing next fiscal year thanks to the demand of AI solutions, bullish for Nvidia. We saw AMD that they mentioned that the AI server market is still very strong, and they are also seeing huge amount of demand. So at the end of the day, all this just points for bullish news for Nvidia. The only real bearish case right now for Nvidia are these rumors of Blackwell delay. And while I have done many episodes on that already, we do have some updates today. But just a quick recap, if these delays are true, and of my overall thoughts, if these delays are true, I don't believe it's necessarily a bad thing for Nvidia, as Nvidia has plenty of demand for the H100 and the H200 chip to be able to offset any revenue loss from that Blackwell delay. If it is also true, I don't believe this is gonna be bearish for Nvidia, as competition is nowhere near Nvidia in forms of technological software and infrastructure solutions. So even if Nvidia sees this delay, I believe they will still be the #1 leader. So while delays can happen, especially as companies like Nvidia develop revolutionary products, in the short term, I don't believe this is going to be anything bearish for Nvidia outside of just this market sentiment. In the long term, still big bullish on Nvidia. And I'm gonna guess if everything is going as we've heard from earnings, these $98, $99 price targets are ones that we're going to find pretty cheap in the next few months, or can consider buying opportunities. Obviously, this doesn't mean go buy Nvidia stock or load up on the stock, right? That's your decision. And the market is very volatile that, hey, look, we can continue to go down from here, and this is nowhere near the bottom. But in the long term, I believe Nvidia will do well, and that's why it is my #1 position. Now, in previous episodes, and this is the topic I really want to talk to you all about because a lot of information is here, and hopefully I'm able to really say my thoughts about this, because to me this now makes perfect sense. So we have heard rumors about the delays of Blackwell, and recently TrendForce on August 7th did announce that despite recent rumors speculating on Nvidia's supposed cancellation of the B100 in favor of the B200A, TrendForce reports that Nvidia is still on track to launch both the B100 and B200 in the second half of 2024 as it aims to target cloud server providers. Additionally, a scaled down version of the B200 known as the B200A is planned for other enterprise clients focusing on edge AI applications. So if you have heard the rumors of these delays, and the biggest thing about these delays is that there is some capacity issue with CoWoS-L, an advanced packaging solution from TSMC that is used to create the B100 and the B200. TrendForce, though, mentions that while this is true that there is some issue with the capacity of CoWoS-L, Nvidia has prioritized B100 and B200 for cloud service provider customers with higher demand. So it shows that, and because of that packaging issue and yield issue, Nvidia is expected to create this B200A, which is kind of like a weaker down version, and it's going to be using CoWoS-S packaging technology. So this now makes perfect sense of everything that's happened, in my opinion, it paints a better picture, right? So yesterday we had Supermicro mention that they are or maybe might be expecting some delays in Blackwell. And as you know, the main customers for Supermicro are tier 2 cloud service providers. It's not your big data center giants like Microsoft, like Amazon, like Google. Those are not the customers of Supermicro. So what we're hearing here from TrendForce is, look, Blackwell 100 and B200 are still in target for release on schedule. But because of yield issues, Nvidia is solely focusing those solutions on those top players. Now, for maybe the smaller companies, the enterprise clients, for those focusing on things like edge AI applications, Nvidia is going to create the B200A. And the B200A is what Nvidia is going to send out to your Dell, to your Supermicro, to your HPE, to all those AI servers that are not building data centers for these big cloud server providers. So that's why I believe Supermicro yesterday kind of mentioned that there might be some delays because they might not be getting the B100, B200 because that's meant for the big cloud server providers. So TrendForce anticipates that the B200A will have lower thermal design power, so it's gonna be more air cooled opposed to liquid cool. So again, something that Supermicro mentions that, hey, look, maybe the advancements of liquid cooling is gonna see some issues in the first half, but later on it's gonna continue to grow. So OEMs are expected to receive the B200A chips after the first half of 2025, providing suitable timeline to prevent conflicts with the ramp up of the H200 in the third quarter of 2024 and ensuring broader market adoption. Now, I want to say this is making perfect sense if true, and if you start to add all the pictures. It's true that there is a delay, but the delay is going to happen to not, I want to say, the weaker customers, but not those big cloud service providers like Amazon, like Microsoft, and all those other players. So if this is true, and again, based on everything that we've heard, this one looks like the most probable outcome. I think this is going to be very bullish for the company, as many people are going to be expecting delays, and Nvidia is going to be like, yeah, we have delays, but it's not necessarily how you guys think about it. We're still sending massive amount of chips to Meta, to Amazon, to Google, to Microsoft, and to our smaller customers who don't need these kinds of strength. We're sending them this kind of scaled down version, which we're able to produce at crazy quantity because it's using CoWoS S packaging. So those are my overall thoughts. Hopefully I was really able to kind of share what I was thinking there, because I know this one is a little bit tricky. Now, I mentioned at the beginning of this episode that there is an analyst that believes there's 3 stocks in the semiconductor space that are sitting at tremendous opportunities after the sell-off. That analyst is Piper Sandler, and the 3 stocks that he mentions are Nvidia, AMD, and ON Semiconductor. Nvidia, just because it continues to be the monster in the AI space. AMD, we're going to see on a bit, but I want to take a closer look at ON Semiconductor first. So ON Semiconductor right now is sitting at $66.39. The stock was down roughly 3%. Year to date, the stock is down roughly 18%. But we can see it is sitting about $6 higher from its 52-week low of roughly $59.34, which it hit somewhere around April, in mid-April. So for those that are not familiar with ON Semiconductor, the company just reported earnings, and I actually did cover them on my ebook. Make sure to check it out on moresemiinvesting.com, where I believe I have over 20 companies already that have reported earnings in the semiconductor space. This is an amazing ebook. The great thing is if you purchase now, you will get the updated versions as I post more companies in this ebook. But we can see for ON Semiconductor, they mentioned that they are seeing growth in AI and data centers as they provide kind of solutions for the power side, and their addressable content is increasing from $2,500 to about $9,500 in kind of these AI data center racks, as they increase from 40 kilowatts to 120 kilowatts. So ON Semiconductor believes that they can definitely grow because of AI and data center. The second thing is they believe that their silicon carbide solution in EVs and automotive can continue to grow. we can see here they believe that they remain on track to outgrow the silicon carbide market by 2x in 2024 through share gain and their geographical and market diversification strategy. So again, I cover so much about ON Semiconductor, from executive summary, headwind challenges, growth opportunities, and so much more. And I do this for all these semiconductor companies that have reported earnings. So make sure to check out that ebook. But I'm gonna agree, I believe the EV market is gonna turn around pretty soon. I also believe ON Semiconductor has plenty of solutions to offer in the power space, which is obviously benefiting from things like AI, from data center, and the list goes on and on. So I'm gonna say the three stocks that Piper Sandler analyst talks about, I believe are great buying opportunities right now, from Nvidia to AMD to ON Semiconductor. AMD right now is sitting at $128.67. I believe that AMD is definitely a tremendous opportunity. This is one that I'm personally going to be buying within the next few days as we continue to see this great value, in my opinion. I mean, from AMD, we just covered their earnings. The company is taking market share from Intel in both the consumer PC and the data center server CPU. They're also having great solutions for the AI accelerator with their MI300. So for me, AMD is definitely looking like one of those big good buys at these levels. Now, AMD, they did just get a price target update from CITIC Securities to 184 from 125. Now, a quick look at PE ratios for these three companies. Nvidia's forward PE ratio sitting at 36. Forward 1 year, which is next fiscal year, is 26.35. For AMD, PE ratio forward right now is 38, and forward 1 year is 23.7. Again, I do believe AMD is very, very attractive. ON Semiconductor, we can see is a cheaper company with PE ratio at 13.81 forward 1 year. Now, if the EV market transform, if they continue to win on power solutions for data center, I believe ON Semiconductor could be a very great stock for investors that want to look into that space. Now, like I mentioned, if you want to learn more about the semiconductor market, check out my ebooks at More Semi Investing. All my ebooks that I have are living documents where I update as we get more information. For example, this Q2 earnings, as more earnings are coming out, I will be sending out more updates. And if you purchase the book now, you will get the updated versions for free on your email. So let me know in the comments below, what are your thoughts on these three stocks that Piper Sandler announced? AMD, Nvidia, and ON Semiconductor. Are any of these on your radar, or only one of them in your radar? Let me know in the comments below. I hope you also enjoyed today's episode. Take care, have a good day, and see you next time.